Okay, people, this is the Wild West now. We announced yesterday and overnight figured out how to produce this next segment, which is a reverse pitch where companies, investors looking to put money into wellness businesses are going to pitch you on why you should work with them, what their companies are looking for, what they're interested in. While I'm doing this, let's put up the slides of the names. Okay, we have two segments. The first is early stage seed investors. Rick's going to kick that off for us. I urge you to take a photo of the screen, but we'll send this out again because this is like getting everybody's business card. So now you're able to email people. Please don't bother them, but if you really do have a great idea or a business in need of funding, these are the people to talk with. And then the next group are the late stage investors. You'll notice Dr. Modi's on both because he's incredibly savvy and he wants early stage and late stage. We are going to bring the investors in. Some of them are on Zoom, some of them are in the room, and they each get 2 minutes. This was decided by the investors. If you can't do it in 2 minutes, it can't be done. So 2 minutes. We are going to buzz them if they go long. I'm going to try to keep this moving, and Rick's going to model what that behavior looks like. So, Rick Stollmeyer.
Hi there. I'm a successful entrepreneur, and I love investing in startups. I love the idea generation and how those ideas are turned into reality. It's literally going from zero, nothing, to one. And what I look for in successful entrepreneurs or would-be entrepreneurs is, number one, that you have authentic knowledge and true passion and enthusiasm for the thing it is that you want to go do. You haven't just done a research project and found out this might be interesting. You really, really are all in because what you're about to do is going to be very, very hard. Number two, you understand who you're going to do it for. The purpose of technology, the purpose of businesses is to help other people live better lives. And you have to know those people. Nothing scares me more than to talk to some software engineer who thinks they have a concept about how to improve something, but they have no knowledge of the market they're about to sell to. Most successful entrepreneurs are not Bill Gates, they're not Mark Zuckerberg, they're not actually the engineers who wrote the first code. Those people are purple unicorns. They're incredibly rare. It's always nice to find one, but they're very unusual because they don't necessarily, the classic engineer doesn't have that. So I'm looking for someone who really understands the space that they want to operate in. They have real experience in that space. And they're open in the how. You're not stuck in it has to be done this way or that way because I'm looking for somebody who's really agile in their thinking, somebody who knows how to grow and evolve and adapt because I guarantee you what you see as the path forward right now will change. It's that commitment. And lastly, a partnership that's really well thought through where the partners, whether it's 2 or 3 or even 4 sometimes, understand each other's desires and goals, understand their timelines, and to really discuss this. And if you want to discuss those kind of things, there's my email address.
Rick, thank you so much. Let's take it to the Startup Nation and Amir Alroy and Galit Horovitz from WellTech One in Tel Aviv.
Hi.
Okay, Amir and Galit, you go first.
Hi, thank you, Nancy. My name is Amir. I'm the co-founder of WellTech One, the first wellness fund and innovation hub located in Tel Aviv, Israel. My passion has always been wellness, and almost 2 years ago, alongside my partner Galit, we had the opportunity to combine those to form WellTech One. We invest in wellness technologies across all sectors. Our portfolio consists of startups in fitness, nutrition, gaming, beauty, preventive medicine, MINDBODY, and more. We seek pre-seed and seed startups with exceptional teams, immense market vision, and disruptive technologies in all sectors of wellness. We look for startups that address a large population and provide massive value to the users. Our portfolio companies and hub members enjoy WellTech One's global network, dedicated team of advisors, a community of like-minded entrepreneurs, and access to global investors.
Israel is a forerunner of technology and is known as a startup nation for many reasons. There are 9,000 technology companies, from which 6,600 are startups, with 2,000 in the health sector. Israel is second to the Silicon Valley with the number of startups per capita. To put the numbers into perspective, Israel has a population of approximately 9 million. Our innovation platform serves global companies and international VCs seeking exposure to the startup nation. We create a bespoke deal flow of wellness technology companies and provide access to the renowned wellness technology ecosystem in Israel. WellTech One conducts the initial screening on behalf of the global companies and VCs and presents the best fit startups that are strategically aligned. We often invest alongside our partners. Our startups benefit from these relationships, which expand their network and global opportunities.
Fantastic. Thank you, Amir and Galit. That was wonderful. Dr. Modi, I can't help but call on you right there on Zoom with us. You have 2 minutes to tell us about your company. Oh, but we don't hear your audio, Dr. Modi. Let's go to Yoriko for a minute, and we'll come back to you, Dr. Modi, in a minute.
Hi, my name is Yoriko Soma. I'm coming from Tokyo, Japan, and I'm quite investing for wellness industry for last 10 years. I believe, Japan wellness is one of the key issue. But I'm very excited about, how to work together. Normally, I'm combining with, Japanese big company who is looking for investing opportunity for the wellness. So your existing business to matching in the Japanese big corporation to collaborate to making bigger. Also, by myself, it's a kind of like an angel investors. At the moment, I'm really interested in mental wellness, using the Japanese Zen Buddhism. It's a kind of like a power of the Zen Buddhism to collaborate the new technology and new idea of the meditations. So anyway, lots of ideas really welcome to working together with us, to collaborate with a big company in Japan, or do whatever you are looking for the Asian market. So I'm waiting your email.
Oh, and they will come, Yoriko. Dr. Modi, over to you in Mumbai.
Thank you, Nancy. I'm in India looking at investment in wellness. I normally do the first round myself, and then at the second or third round, I'm looking for an outside investor. My first investment is already making profit in Rishikesh, and I have come with a new brand called Wellness 2020. I feel that after COVID, the 2020 is start of a new era where wellness will emerge as an industry, and a lot of things could be done, especially in the wellness real estate and also providing wellness next door to your place. So we have planning the next center in Delhi, and that also we are starting, and we are doing the first round ourselves. And for second and third round, I'll be looking for investors. So I make the company profitable first and then go to the market to raise money. So I'm all ready for my Rishikesh project and getting ready for my Delhi project. Thank you.
Thank you, Dr. Modi. He is interested in doing business with lots of people at every stage of development in business. And so I urge you to email Dr. Modi or to talk to Priyanka, who is right there in the room, and also her email was up on the screen. We have people in the room. Victor, would you like to come up and pitch to us? You gotta get a microphone right there. Here's Victor Brick from PF Growth Partners.
So I'm Victor Brick. My business is Planet Fitness Growth Partners, but we have a family office and we do invest in startups. The things that we look for is a sustainable business model. I already have one nonprofit organization. I certainly don't need any others. We look for great management. We look for scalable. It's called quantum leap. We don't go from a 1 to a 2. We look for 10 FERs and 15 FERs, 10 times 50, 5, whatever. It's got to be, we look for businesses with a moat. You have to have a moat around your business because as soon as you're successful, you will be attacked. So whatever you do, make sure you've got a moat because as soon as you're successful, you will be attacked. We look for quality people committed to the common good. We're not about a niche thing that serves a few people. We're committed about the common good. We believe that you'll never have wellness in this world until you can appeal to a large audience. And we need people that are willing to learn because we're not followers, we're leaders. If we're going to get involved, we want to have a hand in the direction of the business. Thank you.
Mark Harms, Managing Partner, Bespoke Capital Partners. Nope, don't touch it, they'll do it.
You'll do it?
They got it.
Okay, that working now? Hi, my name is Mark Harms. I'm the managing partner of Bespoke Capital Partners. I'm also CEO of Global Leisure Partners, a merchant bank. We have done over $60 billion in deals in the last 15 years. We've invested close to $1 billion of capital that we've raised directly and more than $5 billion from other people. We have an operating approach, 75 operating partners who work with us to help us evaluate opportunities and focus on them. We typically do minority investments with strong governance rights. We back great managers in businesses that have really differentiated business models. So that's one of the themes you're going to hear throughout is back great managers with a moat. We have been heavily involved in health and fitness over the years around the world with Fitness First, Virgin Active, Pure Gym, Gymbox, and currently 24-Hour Fitness here in the US and World Gym in Asia. Typical investment size is about $25 million for Bespoke. For disruptive technology businesses, we'll consider $10 million via our Blackwatch Tech affiliate. We have a life is too short, no assholes policy, so that's really important. And on that note, I will finish. Thank you.
Thank you so much, Mark. And if it's possible to IMAG when somebody's here, that would be great for the audience in the room. I know there's a lot of technology and screens going on and things going out to other places. David Weinstein, are you here? David? In the room? Okay. And do we have anybody else on Zoom? Okay. You know these pesky investors. So you know what? I wonder if Rick, Mark, and Victor would come up, and I'm going to just open it up for a couple of questions, because we have a little time, and I would rather use it for that. I'm sure people have some questions for these guys.
We're not giving out any money now, are we?
Yeah. This is we're going to see how much money we can get out of the room right now. Other investors are calling in and doing all kinds of things, so we're not sure who will come on. This was put together quickly, but they're all in meetings. Okay, who's got a question for one of these guys about what they invest in and what they're looking for? Okay, we got a question right here. Do we have a microphone to bring over to Darlene? Right in the middle? Yep, coming over to you, Darlene. And can we get Anna on, Sue? Right there. Okay.
Hi, guys. We interviewed two of you for our podcast, so hello again. My question is, a lot of us have ideas on businesses, and so from here, it's so helpful to hear what you have to say today, and we have your email address, but what's the next thing you want to hear from somebody? How much detail do we get into in our correspondence with you? Do we invite a phone call? How do you like to be approached from here on out?
I'm probably the earliest stage thinker around at this point, so let me start. I'll kick it off. So I get approached a lot, and one common fallacy is that people are really nervous about their ideas. I don't want to share my ideas, and you're never going to get a potential investor to sign an NDA, because you may pitch me an idea that's actually something MindBody is about to do, and I just implied that we're not. No, so don't be too afraid of that. Ideas are cheap; they really are. It is about execution. The chance of your idea being absolutely completely unique and no one else has ever thought of it is very, very low. The chance that you might be able to take that idea and turn it into something meaningful, well, that's a little bit better. And so that's what I look for. So I love to have just conversations, over coffee or whatever, or over Zoom, and riff. And the more you discuss your ideas with good people, and I love the no asshole rule. I absolutely subscribe to that. the more your idea will refine and shape, even if that particular conversation doesn't go anywhere with that individual.
My experience is that you better do your homework and you better be prepared. I went for my first loan. I just recently got a loan for $300 million. I went for my first loan, was turned down for $100,000, and the last thing the banker said as he closed the door on me was, "Victor, get close to your numbers. You'd better know your numbers. Don't come in with an idea, come with a plan, and then you might get it funded." And ideas are great, and it's important to talk to people and kind of flesh in what you want to do, but sooner or later, you got to put pencil to paper, because I wasn't joking when I said investors don't like nonprofits. They've got enough of them, and you certainly have one.
I 100% agree, given some of the experiences that we've had. So in my mind, you need three things. You need a strategic plan, you need a financial plan, and you need an execution plan. It needs to be written down, cogently organized, and then presented. And out of that, we can ask questions, we can analyze, and we can really determine whether people have something special or not.
Thank you. So I want to stay up here, but I'm going to call up now David Weinstein, who has appeared. Here's a microphone for you, David. We're going to give you your 2-minute pitch, and then we're taking some questions, because some of our virtual folks have not awakened yet and shown up. So 2 minutes on the clock, please, and go ahead.
Good morning. So I wear a number of hats. One of them is Managing Director of Investment Banking for Dawson James Securities in Boca Raton. We've been raising capital for small growth companies for about 35 years, or I have, 20 at Dawson James. So we take companies public. Sometimes we'll do a raise, and this is the microcap market, so anywhere you have to have a minimum value of 30 million when you go public, a minimum raise of 15 million. So these are companies that if you have done your audits and you're looking and you have to make a decision between venture capital and the public market, it's always more effective to be public, although it is, you have to do compliance issues. There's a lot of things that you've got to do to get in line, but you sell a lot less of your company when you go public than when you go private.
Thank you so much, David. David is the CEO, by the way, of LifeForce IQ. We're going to keep you right there. And we've got Anna Bjurström.
Hello, hello.
Hello, Anna. And hang on
hello.
one sec. Thank you so much for being here. Let's put 10 minutes on the clock, Sue. And let's go to a question, maybe, Anna, that somebody has for one of these investors.
Yeah, Amazing Maria Benitez asked, are you interested in investing in Latin America? Huge potential for well-being there.
Definitely. Yeah, there's a lot happening in Latin America, particularly in the wellness industry. A lot of tech capability in Latin America. So very interested.
The answer is yes, and it depends where.
It's all about emerging markets, and good investors will go anywhere where there's an emerging market, and again, they think there's an opportunity.
I'm going to just interrupt for 1 sec to say that David Stoup is also with us now, so let's go to David Stoup, Chairman of Healthy Lifestyle Brands and Trilogy Spa Holdings. You guys stay, if you can. And let's put 2 minutes on the clock for David Stoup. David, you've got 2 minutes to tell us about what you're looking for. Oh, got to unmute.
Better?
Better.
Okay. Let me tell you a little bit about HLB, and hopefully many of you will fit. HLB is a health and wellness company using celebrities involved with product development and business incubation. So you might ask, what does that mean? Well, we create great health and wellness products, either internally or in partnership with other manufacturers, and we apply the expertise of and take advantage of the public trust in medical authorities that are on our platform. People like Andrew Weil, Ronnie Lodog, ABC's chief medical correspondent, Jennifer Ashton, or Daniel Amen. And that assures that we have integrity in the products we produce. Then we take those products and we pair them up with celebrity health and wellness enthusiasts, people like Will Smith or Denise Austin, and we create great consumer businesses. It's pretty simple. We build a great product in the hot world of health and wellness. We combine that with the massive celebrity megaphone that comes with literally tens, if not hundreds of millions of social media followers. And the result is that we've been able to cut years of work required to create brand awareness because our medical and celebrity authorities are partners in the business with us. And you know, we become instantly relevant either at retail or in direct to consumer. It's all in an effort to lead to an exciting exit. So we're looking for partners with brand, product development chops, and manufacturing expertise to help us with the next wave of celebrity health and wellness products. If you've already scaled and your business is interested in a true partnership in this exciting sector of the CPG industry, we'd love to connect with.
Thank you so much, David. We bring back Anna.
Yes.
Thank you. And we've got, hi, Anna. And we've got a question in the room. Lisa Starr, the question over there with a microphone. Thank you.
Who's first, Anna or me?
You first, Lisa, in the room.
Okay, my question is, good morning and thank you for your time. What is the duration of time you expect to get your ROI back out of your initial investment?
Well, it all depends. Typical private equity is looking for returns in about 5 years. Some folks have unlimited life funds and are literally willing to be in for 10 plus years. Some are looking for faster returns, 2 or 3 years. And I think it all depends upon the business plan and what the expectations are.
I'm looking for startups that have a clear shot to liquidity within 3 to 5 years. That may not mean that I'm exiting. It just may mean that now we've gone to a Series B or Series C or an IPO.
With a family office, you can have different objectives. One would be cash flow. So sometimes we would look to get into a product that could have cash flow indefinitely, and the other time is for a return, and depending on the potential, it would be short-term or long-term.
So in the microcap IPO market, we look very strongly at catalysts. So you've got to have milestones that are identifiable to keep public interest, because one of the biggest challenges for any companies under 500 million is keeping investor interest, and that includes the public, not just institutions, because the institutions we deal with take long-term positions. And so you have to think of everything as a step-up financing. So if you do 15 million, but your business plan might call for 100 million over the next 5 years, you don't want to go into an IPO with a down round coming up after that. So you've got to really plan with milestones you know that are within your power, and then you have to have wild card milestones that are outside your power.
Thank you so much. Anna, over to you for a couple of questions.
Sure. Anita Murray asks, is there any particular sector in wellness that you're more interested in?
Well, so I'm also working on a project for an ultra wellness resort, sustainable. And so within that complex, we have a biosphere rejuvenation center. So we're very interested in high technology products that are not yet available. So we call them biohacking products that, if they can get the right form factor, can get real uptake. Because when people go home from ultra wellness, you have to design a program for them at home. And although we have a lot of workout equipment, I'm very bullish on virtual reality-based workouts, and also pairing supplements and equipment to optimize people's biology. So anything that fits in that, whether it's sensor-based or new style equipment-based, we're real interested.
We kind of like the renewable product, a la water, a la supplements, where you have a continuous cash flow and a repeat business.
I think mental and emotional well-being is a global crisis, and multiple wellness modalities address it.
We're interested in all of the adjuncts to digitally enabled fitness, including mindfulness, the product space in terms of vitamins, minerals, and supplements, and really across the panoply of wellness opportunities more broadly, because the industry is growing very rapidly.
Any question? Another question in the room? Yes, we have a question back there, and here and here. We've got a bunch of questions here. We've got about 5 minutes left, so I'm going to do one here, one back to Anna, and we'll see how we've got.
My name's Kim Marshall, and this is a two-part question. Rick, when we interviewed you for the podcast yesterday, you said marketing often doesn't cost that much in the beginning. You got to do the free things first, and don't forget. But when you look at a business plan, what percentage do you want to be allocated for marketing, PR, et cetera, before you believe them? And secondly, what platforms for communication are you guys looking at? With the political stuff with social media, do you shy away from Facebook marketing?
So the percentage on marketing depends on the stage of the product, like how the product or service, how ready is it to scale, and what's the nature of the revenue model. So if we're talking about a recurring revenue model, a business where you're going to establish relationships with somebody and they're going to continuously spend money with you on at least a monthly basis, I'm used to seeing north of 40% of revenue on marketing. Yeah, because that's how you're aiming to gain scale, assuming that's your intention. And if you're not intention to gain scale, then you're not going to attract any of these guys on the stage here.
Quite frankly, the answer to most of the questions that we've been asked today is that depends. That being the case, there are general principles. Normally with a new product or a new idea, you don't have to do as much marketing because you get a lot of PR, a lot of hype. Over time, you do more marketing to protect the brand. Coca-Cola does more marketing now than when they started out. Planet Fitness certainly does. So it does depend to a great extent of where you are in your life cycle and, of course, what the product is and the endorsers and whatever. So it kind of depends, but plan on doing a lot more marketing. Once you've been established, you think you can stop marketing, you never stop marketing.
I'm going to just go to questions and not, you all four don't have to answer everyone, just so we can get a few more questions. Anna, have you got a question over there?
Well, Myra Tabaki has raised an interesting question, and that is all the less fortunate. A lot of the investment you're talking about today are to those that can afford and has a spendable income. But how do we invest and reach those that are less fortunate in our world today?
Well, number one is they're going to need to have their costs shared by somebody. So there's only 3 entities out there. Number one is the government. Number 2 is insurance companies, health insurance companies. And number 3 is employers. So systems that enable that, which generally requires an accountability trail. If your employer or your insurance company or the government are going to cost share a wellness practice, they need proof that you actually did it, and they need proof of efficacy on that. And so there are numerous platforms out there right now, and there are some really forward-leaning insurance companies that are putting real wood behind the arrow to actually cost share this and get people of lower income into wellness experiences.
And for bigger companies, corporate and social responsibility is very important. It's something that we look for in all the businesses that we invest in. So what are their ESG principles? How are they supporting the community at large and in the community that they specifically address? And then more broadly, doing well by doing good, we think is very important.
Also, I've noticed, I'm working with an epigenetic company on the West Coast, and they actually signed an agreement with a very large insurer to start putting in their clinics epigenetic testing and certain supplements that go with it. So you've got to really take the pulse of what insurance companies are forward-looking and want to get into preventative medicine. And with that in mind, look at self-insured companies because they've got more latitude and they're more concerned with ROI on their individual employees.
A question in the room? And we've got 2 minutes left, so I'm going to go fast answer, and one back to Anna.
Hi, I've been a seasoned entrepreneur for 15 years and riding that crazy roller coaster, and I was honored to be one of the finalists in the first call for wellness innovations for my platform, Well World TV. I have not actually worked with investors. For those of us who have been small, but we see something
Just going to ask
bigger,
you to get to the question because we've got to
What does that
move along.
relationship look like right out of the gate, working with an investor for the first time?
That depends.
One word, collaboration.
Some investors want to be deeply involved, and you may need that, and others want to be able to place bets in multiple places and not have to spend too much time with you. So it's very important that you have that conversation with them.
And the one advice I can give you with investors, choose wisely.
Anna, let's go to you for a question.
Listen to your gut.
Anna, have you got a question?
Sure, this one is actually from me because I invest in a variety of products. And one thing that we haven't discussed so much right now and what I'm about to go into is social wellness communities around the world. Are any one of you investing in wellness communities? Because it seems like the next big thing.
So what we're doing is we're actually raising capital in Costa Rica for the first ultra wellness resort in the Americas. So we've studied the European model. We think that after the average time to recovery is about 4 years after 9/11 and 2008. So by 2024, we think ultra wellness will emerge as a new category and all the products associated with it. And I think that the travelers, the wellness travelers, are going to be quite discriminatory, and soft wellness is going to fade into hard wellness, and that's where we're putting our effort.
I'm just going to speak for Dr. Modi, who is no longer on, to say that wellness communities is an enormous project for him. He's building 100 of them in India and has plans far beyond. So there's a lot of interest in wellness communities. I'll let you guys have the last word. We're out of time, but go ahead and finish. Take us home, Rick.
I'm going to go tangential. The Social Dilemma. How many people here have seen this? Please watch The Social Dilemma. Victor brought it up yesterday in our lunch discussion. It directly ties into what's going on with emotional and social well-being, and it's not political.
I want to thank everybody. Thank you guys so much.